Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equity markets at this point of time at least are poised for a softer start coming in the data-heavy week globally. SGX Nifty recorded mild gains indicating somewhat mildly positive start coming in for domestic equity markets. US tech stocks ended tad higher as Tesla rallies. While Asian stocks at this point of time, they're trading mixed as traders eye rate decision this week. And if you talk about the macroeconomic of few of the cues which have come in, Moody's at this point of time says that India's GDP is expected to expand between 6 to 6.3% in Q1. It, however, is flagged fiscal slippage risk in the entire ongoing financial year from weaker than expected government revenue. Talk about FIIs, they've sold shares, but the amount remains small there, 308 odd crore. And if we talk about the DII's data, they've bought in shares worth around 1,245 odd crore. So continuous support has been provided back home by DIIs. Well, talk about the FNOQs out there. 31 stocks that have been seeing long build up. This is based on OI percentages, of course. And these stocks include Balrampur Chini, India Cements, Hindustan Aeronautics, Apollo Tyres, and Delta Corp. Apart from that, 48 stocks, they've seen long unwinding. Now, this includes the like of Kotak Mahindra Bank, ICICI Prudential Life Insurance, Siemens, Escorts, and Container Corp. If you talk about the stocks which have seen short build-ups, 78 of them, which include the likes of Indian Energy Exchange, no surprise there, Atul, for another session, State Bank of India, Exide Industries, and Dr. Lal Pathlabs. Now, almost 31 stocks have seen short covering. This includes the likes of Mannapurna Finance, About India, India Mart, and DLF and L&T, amongst others. But we're here to discuss the stocks and strategies up with Prashant Sawant, who's the founder, Catalyst Wealth out there. Good morning there, Prashant. How's the week shaping up for you, and what is the trade setup looking like? What's your strategy in this week, which is going to be an eventful week globally?
Hey, good morning, Nikki, and good morning to all the viewers. So, what I'm looking at is a slight dip on the index. And currently, if I look at the index, talking about Nifty specific, so I think in futures, that is in June futures, we closed at around 18,630 on Friday. And I feel a dip to somewhere around 18,500 zones would be a good level to enter long. So I would wait for that dip in the first half, say today, tomorrow. And if I get that dip somewhere around 18,500, I'll enter with a 50-point stop loss, which will be around 18,450, 440, and look for targets around 18,700. But if you look at why I'm looking at this strategy is purely from a risk reward perspective in an otherwise consolidating or a sideways market, which is expected after a strong move. And overall, if you look at the broader view on the index, it happens to be consolidating tightly range bound with the upper side capped at somewhere around 18,850 in futures and the downside around 18,500. And that's why I'm looking at a pullback to the lower level, wherein we can initiate a buy with a 50-point stop loss and look at a 150 to 200-point reward. So that is my strategy for Nifty for the coming week. If I talk about Bank Nifty, it's currently trading somewhere around 44,100, 120. That is where we closed on the Friday session. And I'm looking at a dip to somewhere around 44,000, where we can initiate a long with a stop loss around 43,750, 43,800. These levels happen to be very strong support levels for Bank Nifty futures. And from there, we can again look at a higher side, which was around 44,500 to 44,600. So I think that would be the ideal way to trade in a consolidating market, wherein you initiate a buy near the lower range of the consolidation and look at the targets which are the upper range of the consolidation. Overall, I am not looking at a breakout very soon, but when the breakout happens, I think the index would take the lead would be Bank Nifty as compared to Nifty. But if I talk about both the indices, two major stocks to keep an eye upon, Reliance for Nifty and HDFC Bank for Bank Nifty, both have underperformed, and that is the main reason why the indices have not broken out of their major range. So I think that happens to be major, and for Reliance spot, 25-30 happens to be a major level on closing basis. Unless and until we don't close above that, I think we'll still continue to be range bound.
All right, Prashant, that pretty much covers in all the Nifty, Bank Nifty, and also the stocks that you would recommend this morning. I'd want to ask and chat about IEX. That's the one particularly that's been in focus for a couple of days now. What do you make out of it, and what does the chart suggest apart from any profitable idea that you can suggest to our viewers, barring the stocks that you've mentioned, RIL and HDFC?
So if you look at, Nikki, there are always two reasons to buy a stock. One would be it has a strong momentum, it is breaking out and you are initiating a buy to take advantage of that momentum. The other one is it has come to a support and your risk is very low. Now, if you look at IEX, definitely it has underperformed and it has been totally range bound. Any and every rally has been sold. But currently it is at 126 level. And if anyone wants to initiate a small quantity buy, you can keep a stop loss at 120 on closing basis and buy. Pure reason is low risk, but at the same time, I would definitely say do not try to trade this in futures and options. I'm not even sure whether it is in ban, but prefer to be in cash. Keep your 120 as a clear and crisp stop loss on closing basis. If you close below this, exit. And overall, 120 is a make or break level. If it breaks positionally, I think you will have to exit all the positions in the stock.
Yeah, we're we're seeing shorts being built up. Maximum based on the OI percentage as per the data that has been giving. We've seen more shorts being built up for this one. Of course, it's been in the news for the regulatory changes that have come through, because of which the stock has been hammered down. But sure, you've given in the stop losses for this one. But what's the upside for IEX also?
So I think the rally from here, you can target levels around 135, 140, and they would definitely act as resistances. And that's why I've given a clear 120 stop loss, wherein you have a 6-point risk and you have around a 14 to 15-point reward. So risk reward is decent enough, and that's why you can initiate a long in cash.
Right. Apart from that, the two suggestions, Prashant, that you were making, please go ahead.
So I think one stock which has taken a good dip after a decent rally is Pidilite, and I think I would like to go long here. My stop loss in spot would be 25.75 on a closing basis, and my target would be around 2700. 2690 to 2700. This looks like a very good setup. And another stock which has underperformed in the NBFC space is L&T Finance Holdings. And my stop loss here would be 101 spot. And my target would be 112 to 115. I think both these stocks may give a decent move for the week ahead.
All right, L&T Financial Holdings is the other one, and IEX, like Prashant indicated, it's probably the one which is led, it's in the ban list, F&O Securities ban list, because there was a massive selling over the last couple of sessions, which was following the government approval for market coupling in the electricity sector. The stock could see some volatility being played out near term. Bears appears to be in command right now. If you speak about how bears have been behaving for IEX, if you look at the week-long drubbing, it is a sharp move coming in for IEX. At the same time, if bulls are able to hold on to the prices in the cash market somehow, bears will be forced to cover their position as they can't build fresh shorts position owing to the ban right now. So that's a bit of challenging move coming in for IEX out there. UBS, however, feels concern over market coupling may have been overdone at this point of time, and as also of the view that the market-based economic dispatch could be difficult to execute given the complex settlement procedures out there. Also, do bear in mind the fact that there are a couple of IPOs which are going to be raining in this week. Urban Environment Waste. It says Urban Enviro Waste Management IPO, which opens for subscription on June 12th, which is today. It's an SME IPO, and it's come up to raise around 11 odd crore from the market. Bizotic Commercial IPO, that's another one, June 12th, which is again today, and the public offer will be available at a fixed price band at 175 per share. The SME company aims to raise around 42 odd crore, and Cosmic CRF IPO. That's another one for you. The issue is all set to open for subscription on June 14, and the company is planning to raise almost close to 60 odd crore. Well, in bunch of stocks that we'll be focusing this morning will include the likes of SpiceJet. Now, Wilmington Trust SP Services has moved in an insolvency plea against the company. That's a story which is up there for you to grab on Money Control website. The case is likely to come up for hearing on June 12th. DGCA has deregistered 3 planes of SpiceJet at the request of the lessors. One of the aircrafts belonged to Wilmington lessors. Approximately 3 of them have been, deregistered because of the non-payment issues, and this continues to be the entire stock. The counter remains to be seen how will that react for the day on account of this development. SAIL is another one. Well, LIC has acquired an additional stake coming in the company to an extent of 2%. This shall be done via an open market transaction. LIC has increased the shareholding in the company right now to 8.6%, up from 6.68% that it had earlier. Info Edge, another one that you need to keep on your radar out there. The subsidiary has sold an entire shareholding in Happily Unmarried. This has been sold to VLCC for a consideration of around 61 odd crore, and Happily Unmarried is an associate company for the subsidiary whose name is Startup Investment. The stake sale will be buying in mix of cash and swap of shares for around 61 odd crore. The stake sale is expected to be completed within 2 months. And CMS Infosystem, which is another one for you, but we're going to be addressing in the markets open for you right now. Market open at this point of time, Nifty 50, we're seeing gain coming in to an extent of 0.1% out there. It's holding about that 18,550 mark for Nifty 50 at this point of time. Bank Nifty, talk about that. We need to see how that is shaping up. Bank Nifty is also holding up, albeit it's a little bit of flatter start coming in for Bank Nifty, but we're seeing it with positive bias. Bank Nifty at this point of time is up in trade with gains of around 0.1% and is comfortably holding the head about that 44,000 odd mark. Talk about other mid-cap and the small-cap performers just to see if they have been outperforming the markets. Well, we're seeing similar amount of momentum coming in even for the mid-cap index right now. We're seeing gains to an extent of 0.2%. Small-cap index too, we're seeing gains to an extent of 0.4% coming in for that one. In terms of sectoral indices, just to see how are they shaping up, IT index right now has been holding up with gains of around 0.5% in the entire week. IT and metal, these will be the two counters that you need to, the sectors instead, that will have a lot of development emerging out of the globe. FMCG, another one with gains of around 0.1% out there. In terms of metal index, like I pointed out, it's going to be a crucial week both for IT as well as metal index in terms of the events that are going to shape up in this entire week. Talk about the auto index, that too has been holding up. The basket is doing well with gains of around more than 0.75% out there. Pharma index, however, at this point of time seems to be bucking the trend in the opening deals. We're seeing losses to an extent, but they're slender ones. Slim losses coming in for the markets. FMCG, like we rightly indicated, it is up with gains of around 0.1% out there, and realty index too. That's the one probably which is outperforming after the IT index with gains of around 1%. But do keep an eye out on metal and IT. If you talk about the market momentum, well, comfortably holding about that 18,590 mark and slowly, gradually inching towards that 18,600, flirting around that level. Remains to be seen if we can scale in the new record high levels coming in for the markets. JSW Steel, Tata Motors, L&T. These are some of the top gainers that we have on the list right now. Apollo Hospital, Axis Bank and Hero MotoCorp. These are some of the other top gainers on the screen right now. NTPC and Britannia and M&M too seem to be participating in the rally right now. So it's clearly the auto index which is holding up. The entire index moves out there. But if you talk about the losers, well, Kotak Mahindra Bank, which is already seen in some long unwinding position out there, Coal India, Tech Mahindra and Infosys, HCL Tech, Divi's Lab. So you have some IT names right now which are also featuring in the top losers list. TCS, Eicher Motors and Bharti Airtel. These are some of the other names that we have on the list right now. If you talk about SpiceJet, that remains to be important, right? So we're checking out if SpiceJet has been doing well in trade, and something in spikes of specialty chemicals too. We're going to be talking about it. Jefferies has come up with a report coming in for the entire specialty chemical sector out there, but that also needs to be addressed in just a bit. But SpiceJet first, that needs to be seen. How is that done overall with the kind of insolvency plea which has come in from one of the lessors out there? That remains to be tracked. TVS Motor Company, PI Opportunities Fund to acquire in additional equity shares. This shall be acquired in TVS Motor subsidiary, TVS Credit. This shall be for a consideration of around 257 odd crore, and it's going to be holding in 9.72 stake in TVS Credit. Like I suggested, there is a Jefferies note on specialty chemicals. The entire sector has been buzzing. New project investments has been announced to an extent which is expected to reach in $91 billion in FY23. It's already reached that amount, and gross block revenue, EBITDA, for the entire sector, that's rose by more than 2.7 times, 2.8 times and 3 times respectively from a span of FY17 to 23. Navin Fluoride, that's the one where some of the preferences come in from Jefferies. They see a growth of around 35% EPS CAGR that the stock is expected to register between FY23 and 25 estimate with an upside optionality. Of course, they await some pullback in SRF to potentially turn more constructive in the entire space right now. So that's the word coming in for specialty chemical space from Jefferies. It's a space which is interesting to watch out for. Some amount of correction has already crept in. SRF is probably one of the preferred bets out there, but do keep a close eye out on this one. Prashant, I'm going to come back to you and check with you. What are you making out of the market open? Nifty 50 is flirting around that 18,600 level. You see, anytime soon, are we closer to the record high levels happening at least in this week, or you expect some amount of caution setting in again?
So I think the opening has very well justified what I was looking at, Nikki, which is a pullback to those 18,500 levels in futures. And if you look at the opening, it has already been sold. I think the bulls are not in strong control. So a dip to those levels in futures around 18,500, 540. That would be a place where you can look at initiating a fresh long if it bounces from there. So overall, for now, I would not be carrying any longs in the index. But definitely, as I said, the two stocks which I recommended, Pidilite and L&T Finance Holding, they have opened well. I think they might do well for the week. So you can stick to and be stock specific, sector specific. Just have a word of caution on the index. I'm not saying go short. Wait for a dip, and from that dip, the levels which I've mentioned, if there is a strong bounce, you can definitely initiate a fresh long.
All right. Also talk about IT stocks right now. Do you see more traction building in on this one? They've been beaten blue, and today also in session trade, some of them are the top losers there. Your word coming on that one?
So I think more than the frontliners, I'm more. I think the pattern on the mid cap ITs looks better, and Birlasoft happens to be a pick which I think I'm tracking currently. It is currently at 332, and I think that would be a good level to enter with the 320 stop loss. Overall, the pattern has been good, and after a strong rally, it has given a decent pullback from where it is showing signs of a bounce. So with the 320 stop loss in spot, I think you can initiate fresh longs for targets around 350, 355.
All right, Prashant, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, we're going to be addressing and talking about much of how the markets have been behaving, how steep the valuations are specifically, and how specialty chemicals as a space looks attractive. And to join the discussion and take us through the fundamentals of the market, Amrish Baliga, independent market expert, joins us right now. Hello there, how have you been doing? It's been a while that we've actually chatted around. I'm going to start off by asking you about your assessment overall on the market assessment, market valuation. Do you find them steep at this point of time as Nifty is now eyeing around that new highs? What do you make out of it?
Good morning, and glad to be back after a long time. Talking about the markets, I think, we've already seen an extremely good move from the low levels which we saw in late March, early April. And from there, it was a sort of a one-way move. Although the earnings have been extremely good and that supported the markets. But at this point of time, I really don't see the markets shooting up much more from here. We could possibly have a consolidation, maybe a sideways sort of a move, time-biased correction over the next possibly 1 or 2 months. Because I think the joker in the pack right now is the monsoons, which are, already got delayed. Just hit the southern coast, it's hit south of Maharashtra. So now we need to see as to how it progresses. And I think the more important thing is the spread of monsoon. I think that should be known possibly over the next month and a half. And I think that could be the next trigger for the markets. But then if you're talking of longer term, if you're talking of the next 2 to 3 years, I don't think anyone globally, none of the global investors can afford to miss out or ignore India. So I think we should see an extremely good bull run And I mean, I would also say that we are currently in the beginning of a bull run, but it need not be a one-way move. We should see some corrections in between. And right now, we are in a position where we could see a small correction. So, from a long-term investor's perspective, I would say that if you're still sitting on cash, utilize this consolidation, some correction to buy into the markets. And if you're a trader and if you've got extremely good sort of return in the last couple of days, last couple of weeks, possibly book out to a certain extent and wait for lower levels to buy in.
All right, that's the word coming in on how the market has been behaving. Fair assessment, a bit of cautious call out there, I would say. But clearly, if you talk about the monsoons out there, they've entered in Maharashtra. I think it was raining well in Mumbai as well. I'm sure we're going to be enjoying that view. But the entire worry around the El Nino and the space shaping up overall for the rural recovery, what are the bets that you're keeping in mind for this, for entire monsoon theme around?
No, I think more than the monsoon theme, I think based on the monsoon theme, you should be playing possibly on FMCG, auto, as well as your white goods sector. I think this is what should do extremely well if the monsoons play out decently good. And in that, I mean, my picks clearly would be Britannia, Dabur, and in the white goods space, it would be Whirlpool and Voltas. And in the auto space, it would be Maruti, Mahindra & Mahindra, and Tata Motors. I mean, these are the three picks which I have in the auto space, in the four-wheeler and HCV, LCV space. Whereas if you're talking of two-wheelers, I would surely pick TVS.
What do you make out of the entire specialty chemical space? There was a report early in morning from Jefferies out there, where Navin Fluorine was one bet apart from SRF, where they'd want a certain amount of more probably potential recovery out there to kind of initiate or go long on that one. Do you find that attractive at this point of time, the entire space? Do you have select picks out there from that space?
Absolutely, because I think, post-COVID, that China Plus One really played out extremely well in the specialty chemical space. But there's a lot of difference what has happened from 2021 till now, because quite a few of these specialty chemical players have also become one of the largest globally. The Indian players have actually become one of the largest globally, and they have that major niche in a couple of their products. So I think that is what is going to play out from now onwards, because in the last 18 months, we have seen most of them underperforming. But I think from now onwards, you'll see that major outperformance coming back. And other than SRF and Navin, I mean, my pick in this space would be Deepak Nitrite, which again hasn't really done too well in the recent past. But I have a price target of about 3,000, 3,100 for the stock.
Right, that's the word coming in. Deepak Nitrite is another one that you can keep on your radar. Overall, what else looks attractive? The defense space is probably looking attractive.
Right.
I was speaking to the ace investor Poranju out there. He was speaking about railway being the theme and defense being the theme. What's your assessment?
Yeah, I think this is a theme which is going to stay there for the next, foreseeable 3 to 4 years. But then at this point of time, I'm just picking up one of the stocks which hasn't moved, in line with the others. And I think the potential is there, which is Garden Ridge Shipbuilders, which again is a premier shipbuilding company under Ministry of Defense. And it designs and constructs warships for Indian Navy and Indian Coast Guard. They've delivered a decent number of warships, about 107 warships to the Indian Navy, and about 780 vessels, which are the smaller ships to maritime security. And they're also into commercial vessels as well as they manufacture engines. Their engineering division constructs portable bridges and deck machinery items. And we're discussing, government's focus is there on defense and Make in India. So this is also reflected in the order flows for Garden Reach. If you see the order book position is about 24,000 crores. And more important than orders is the execution space, which has been extremely good for them. So I'm expecting a 40% CAGR over the next 3 years. Even if you look at FY23, it was a 44% growth on revenue. So I'm expecting an EPS of about 58 for FY25, and this would result in a target price of about 696.
How about Mazagon Docs? I'm sure it's already it's probably of the same category, right? So we've seen
exactly, but then if you look at Mazagon Docs, it has actually multiplied.
Yes,
it is not percentage; it is multiplied. And at these levels, it's getting a bit pricey. No doubt, it can go to 1,500, but I mean, when a stock has already moved so much, it's better to look at stocks which have the potential to move faster.
Sure, point well taken. 1 month I'm just seeing return of around 35%, 3 months it's more than 41%, and on a year basis it's more than 250 odd percent. So clearly looks like a run up out there. So probably that's the one. Garden Reach is another one which belongs to the same space and has a potential. But apart from that, Amrish, anything that you like right now, sweet spot where the viewers could be looking at, looks like a good buying opportunity out there?
The other one is in the power sector. In fact, my pick is Tata Power. It's the largest integrated power company with about 14.1 gigawatts of portfolio, in which about 37% is clean and green energy, which is the future, clearly. And I mean, they're going in for expansion of about to about 17 gigawatts. And when that happens, about 47% of the capacity will become clean and green. So, in fact, if you look at the solar and hybrid capacities, that's being increased from about 5 gigawatts to about 25 gigawatts by FY30. And they're also into solar solutions, EV charging, and other services like home automation, in addition to utility scale solar EPC. They also are setting up a greenfield solar cell module factory. So that's the basic raw material for them. And this is being set up in Tamil Nadu and should be operational by about Q3 of the current year. And if you look at the customer base, it's decently large, about 14 million customers in Delhi, Mumbai, Ajmer, and Odisha. So here I'm expecting an EPS of about 13 rupees by FY25, which would result in a target of about 260, a decent return from the current levels.
All right, just an additional point out there, the company has been fetching in low ROE of around 9.47 over the last 3 years, but clearly some amount of potential which is building up for Tata Motors overall. Beg your pardon, Tata Power overall. Amrish, apart from that, anything that you like, any space that you think is more interesting at this point of time that probably, sure, Tata Power was one of the bet that you suggested, but anything more from the defense space that you like?
See, in defense space, I mean, I continue like Mazagon Docks, like I discussed, but I'll not buy fresh at this point of time. Cochin Shipyard possibly is the other one which could be looked at. That again follows Mazagon Docks, no doubt. But then again, there's news today that they've got one more order for about 300 crores. So I think one can look at buying Cochin Shipyard also.
All right, Amrish, don't you think IT and Metal Pack is expected to be in focus for the entire week this time around? There is a US Fed meet outcome on Wednesday, CPI data on Tuesday, ECB meet on Thursday, Bank of Japan meet on Friday. So it's an eventful week. Do you think that will have a bearing on the entire IT as well as metal basket?
It can have a sentimental impact for a while, but then if you're talking of medium-term outlook, IT, I think for the next 2 to 3 quarters will find it difficult with the order flows. Sorry. And as far as metals is concerned, I clearly see that the upside is over and the metal prices have been correcting sharply. So we should see still lower levels if you're talking of the next 3 to 4 quarters.
All right, so that's the word coming in on the entire metal pack, which doesn't seem to be like moving any upward going forward. But Amrish, we're just going to leave it at that. And thank you so much for taking out the time and joining us this morning.
Thank you. My pleasure.
All right. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned into moneycontrol.com and Money Control app.